our property's locked down.
Yeah.
There is no real estate market.
We need to
Get real.
Right. And start having ethics.
Yes.
You know, are we doing the right thing?
I was kind of forced into retirement with COVID because when you can't show the inventory, you can't sell the inventory.
Yeah. All right, everybody, welcome to the Elite Zone podcast, where we sit down with real estate agents, lenders, business owners, entrepreneurs, and all kinds of interesting people. We talk about different ways to market your business, what's going on in real estate and housing. I am your host, Max Bergstrom, and today I've got Jim LaMattery on with me. Jim is, wow, he's about to drop just a bomb of knowledge. This guy knows a lot about housing, about the market, about how money moves, about loans. He got into the business 4 years before I was born, and he's, you know, and I'm not saying that he's old, because I believe, Jim, that you're going to be a centurion. All right.
Oh, yeah.
You're going to make it to 100 and you're still going to be doing this. But Jim, one, how are you? And two, thanks for being on the show.
Hey, doing great, doing great. Like you said, I've been in the business for a bit. I got in 1981. And at that time, it was a similar environment as to today's environment. So interest rates were 17% in 1981, which is the historical high.
Yeah.
And houses were around 100,000. But you go do the calculations on that, it's kind of like the payment of today.
Right.
So, and in fact, in 1981, that's when the Federal Home Loan Bank Board chairman allowed banks to first introduce adjustable rate mortgages.
Right.
Which, by the way, and I'll talk about this more in probably in this podcast or maybe others, but the adjustable was a great tool for the right buyer. So,
what do you mean by that?
well, the adjustable rate that first came out was one based on prudent lending.
Mm-hmm.
So prudent lending is an idea of look, don't make loans to people who can't repay them.
Yeah. Right.
So that's in a nutshell. But prudent lending, the determination of the borrower's ability to repay the debt, right? So creditworthiness and income.
Sure. Tell that to the Department of Education about my student loans. I'm just kidding. Those things are a bitch, though.
Oh,
I graduated I got my associates in 2006, and then I got a bachelor's in 2010. It's 15 years ago now. I got still got like $60,000 in student loan debt.
Oh God. Well, what's sad about that, and this gets to policy. Look, we need the right policy coming down from the top end to help us out of this situation. We're in a real tough situation in this housing market, and we got to wake up and do something about it now for young men like you to get in and buy a home. But along the lines of the student loan, it used to be in underwriting that we would waive that payment in the calculation of the borrower's ability to buy.
Sure.
Right?
And, they could turn around and say, well, look, Mr. Bergstrom, you went to school for psychology and then you didn't use that degree. And you know what? They'd be right. So I'm not making excuses, but I've even thought, like, when I first moved out here, I took, my ex-wife, we loaded everything in a van, we drove out here. This is 2016. And it was like, we're just going to make it work because I'm a make it work kind of guy.
Yeah.
But I got out here and, she became pregnant right away. And I started looking at the median income for a therapist out here. And I was like, ooh, I don't know if that's going to work. So I went a different route, right? And, you know, I probably make a lot more money now. But the thing is that I'm not the only one in that situation. I mean, I know guys and girls that are brilliant. They went, you know, engineering, doctors, lawyers, people in all aspects of business and finance and entrepreneurship. And they're all struggling. They're all struggling.
Yeah. And then when it comes to them buying homes, what are you finding?
Well, I think, you know, I'm an elder millennial. I was born in 1985.
An elder millennial.
An elder millennial.
Does that make me an elder boomer?
I think it just makes you a boomer.
Yeah, okay.
My parents are boomers.
Yeah.
But I want to say we are the term boomerang, which is, you know, you move out. Yeah. And then, you know, 10 years later, you move back in.
Oh, the new boomers.
Right?
The new boomers.
But I did that before I moved out here. But I know a lot of people that, you know, in my age and my generation who at one point moved back in with their parents for a little while.
Yeah.
You know, and I mean, there's probably a lot of people that, well, you know, the whole bootstrap mentality, pull yourself up by your bootstraps and figure it out. Look, I get it. I'm a smart guy. I'm an ambitious guy. I make good money. I've got a business. Answer. No, exactly. Yeah. I don't think so either.
Yeah, it's not.
You know, and real estate, like all the agents that I talk to and that I meet and that I work with, a lot of them are sympathetic. Like they're like, dude, I get it. You know, I get it. Like we need to figure something out. But you know, like I've told you in conversation, the agents and the lenders that I've spoken to and a lot of people that I know, they say, well, hey, do you have family you can borrow money for a down for a down payment?
Right.
Or, you know, we're trying to get you qualified. If you made like a little less money, then maybe we could qualify you for this or for that. But it's like, I don't fall, like if you look at my financials on paper, they're like, this guy doesn't need any handouts.
Exactly.
But the market we live in, you know, I got a friend that owns a shack west of the 5 in Carlsbad. It's $2.5 million, you know, like, and it's nothing special.
Well, okay. So
I don't know.
So look, I think the first thing everybody has to understand when they come to good old California, and I'm a native San Diegan, it's the land. Yeah. Underneath all is the land.
Right.
So you're not necessarily buying a house. You're buying a piece of land.
Mm-hmm.
You're buying the ability to live in what I believe is the country's finest city.
Indeed.
Okay? Now, given that, if we don't get you guys who are raising families into homes,
mm-hmm.
we are going to not be well, you're a psychology major. You know damn well what it means. It's kind of like, you need a place to raise these children. Jesus, I learned 30 years ago in the business, I'd have a young family coming to me, you know, we're going to buy a condo. Are you sure you want to do that? I mean, because look at kids, you need some place to fight.
Yeah. A yard.
You need a yard.
Yeah.
You need to raise kids.
Yeah.
This isn't going to be, you know, you may want that fancy condo downtown with the view, but please give it some consideration. Of course, I didn't get too hot and heavy with it because, you know, everybody's got to make their own choice.
Sure.
But the other thing was I was guaranteed a second sale.
Yeah.
Because as soon as they got into the condo
mm-hmm.
and their music was a little too loud, or their child was a little too loud, they'd get enough pushback that they're like, I'm out of here.
Yeah.
Right?
And then they'd be calling you up again.
Going, hey.
Say, Jim, remember when you said maybe we should get a house instead of a condo? Yeah. Maybe you were right.
Yeah. So really it's a lot more serious than that because there's some real, I believe there's some real intrinsic things about property ownership that are important. Mm-hmm. So one of the biggest devastations going on right now for your generation is you're not gaining the equity.
Yeah, I mean,
mom and dad got the equity.
Yeah, well, and not only that, but I mean, I'm 39, and have, to be vulnerable, have very little savings.
Because you're the high cost of living. Plus,
it is. And hey,
but what about your housing costs? That's probably your biggest.
Well, I don't own a house, and
but rent.
Yeah, we rent.
But
Here's
rent
the thing:
is such a high cost. That's what I'm getting at, right?
It is. Rent and the cost of living. I'm certainly not complaining about living in San Diego, but I don't have any right now. There is no clear path for me to own a home. Every avenue that I've tried and people I've talked to, after the whole situation, running the financials, are kind of like, yeah.
But that's what I'm after.
Right.
I'm after that clear path.
Exactly.
And
so how do we do that?
Okay. The first thing we have to look at well, what do we have? It's kind of like the gratitude thing, right?
Absolutely.
I get up in the morning and the first thing I do is, wow, I'm still alive.
Yeah, right?
How cool is that? And then the second thing is, and I still live in San Diego.
Yep.
I'm not Big Joe. I'm not leaving San Diego. I'm not Matthew McConaughey. I'm not leaving California because I'm getting taxed too much.
Right.
I'm staying here and fighting. I'm a native. I'm fighting this out, and I'm going to fight this battle too. So one of the things that we have to do, I think, as leaders in the industry and as agents, all the way down to the lowest tier of agents, we've got to start acting and thinking more responsibly about getting the end user that we want in the property.
Yeah, I mean, it seems to me
want
that would be
homeowners in there. We don't. So one of the things we're going to have to look at is how much did we play into the institutional investors game, for example, during the foreclosure crisis in 2008. So getting back to solutions, here's one. When a property goes into foreclosure and Fannie Mae owns it, that's a government-backed security.
Yes.
When Fannie Mae owns it, there's no way in the state of California that property should be resold to an investor just because he comes to the door with cash and can close it quickly.
Okay.
What if we had policy that was aimed at getting the end user, the home owner buyer in? So if all you needed was time to gather your loan application together to close that, gee whiz. Because, listen, since I've been in the business, Fannie Mae has touted itself as looking after true homeowners.
Sure, of course.
So, for example, they'll lend to the investor, but it's at a higher interest rate, right? And a larger down payment.
But the investors can do that.
The investors can do that. So how do you do it? I'm going to get a little personal because there's a way you can do it.
Okay, well, let's hear it.
The first thing you got to get out of your head is this nonsense that you can't go to your family for help with that down payment.
Okay.
Because your family, particularly if your family's living down the street in San Diego.
They're all in Minnesota.
Okay, they're in Minnesota. Okay.
But I get what you're saying.
There still may be room here. One of the avenues is for family that have equity, because everybody, look at from 2016 to now, everybody's got a gold mine in their house.
Yeah,
but they're not moving.
Yeah,
because they can't move. There's,
and they can't afford. The next home they want, they can't. They're not getting enough from the sale of their home.
No, that's not it.
No?
Oh, no way.
What is it then? Why are they not moving?
Okay. The reason they're not moving is because there's not enough other sellers willing to sell. Everybody's stuck. Part of it, this has to do with interest rates. Now, look, I came from an era when I was selling homes and it was 17.5.
Yeah.
Right?
Right.
And I used to say, it'll never come down to 7%. So as interest rates are dropping over the years,
what you told me before the show, to explain to the audience how that correlates to, how people are like, it's never been as bad as it is right now. And you get a lot of that. But what you were telling me is that back then it was actually, comparable, if not worse.
It was worse.
Right.
It was worse.
So the mortgage payments were
killing you. But dial up to today. One of the avenues we have for dealing with that, it's our middle market that's stuck. So in a normal, healthy movement, you have that it starts with the guy the family that bought the 2-bedroom, 1-bath now has more children, and they need the bigger home. So they need to go up to the 3-bedroom. The 3-bedroom guy's stuck. He's got all this equity, but there's nobody above him moving either. So you have to start getting movement.
Yeah.
So it's not so much a matter of lack of inventory as it is lack of inventory on the market for sale. So no one's even considering moving up when they just got their home. Let's say they bought in Bay Park.
Yeah.
All right. And they bought a really small home in Bay Park, and now they want a bigger home in Bay Park. Well, we used to have those transfers all the time.
Sure.
Right?
Yeah, you get in there,
market.
you have kids, or there's a reason why you need to size up.
To size up. And there was enough available homes to do so.
Mm-hmm.
Now there isn't.
Right.
Part of that is everyone just took advantage of historically the lowest interest rate in history in California was in 2016.
Right.
It was a 3.5% 30-year fixed.
Yeah. It don't get much better than that.
So I just bought my home, and it wasn't big enough for me, but I got a ton of equity in it. But if I move, I've got to go get a 6%. Well, 6.63. So I've got to double my payments.
Right. Okay.
But there's a solution to this. And for agents that want to get on with what I'm doing and track where I'm going with this, I'm building a referral system so we can get the people to you. But basically, you have a lot of FHA loans that were done in the last 5 years that are at low interest rates.
Right.
Those loans, by federal law, are assumable.
Mm-hmm.
So I'm starting to match people on this tier that have that low interest rate loan with people on this tier that have that low interest rate loan, and doing basically
you're moving them up the hedonic treadmill.
But
right?
I'm using not just their house, I'm using their financing.
Mm-hmm.
So this list is building, and as it builds, we'll have a network of movement. So that's part of the way. So you have
So break it down for me. Here you go. I am, I live in Claremont. I got a 2-bedroom house, and
you're renting it.
and I want to buy.
Okay.
And I want to buy a little bit bigger.
Mm-hmm.
Same area, but I want to buy a little bit bigger because now my family has grown and I'm doing a little bit better income wise and all of that.
Right.
And I want to buy your place, and you have got a 3-bedroom, a little bit bigger lot, in Kearney Mesa or something like that, and it's just a nicer home. How do I and then you want it, something even better somewhere else.
Right.
So how do we, if the interest rates and the inability to afford mortgages is halting all that, how do you use your assumable? How does that break it down?
It's strictly a matter of matching. So it's kind of like what the old 1031 exchanges used to be. You could avoid
capital gains
right. by transferring like kind to like kind, right?
Sure.
So it's more of a transfer or a swap than it is a sell, but we handle it as a sell. So I'm working with a network of agents who know how to put this stuff together. What I do is gather the names. So you get on, you'll be able to find the information on how to contact me at the end of this. And you get, if you have an FHA loan,
right,
you need to get on the registry.
Yeah.
Yeah, because then we start to amass who.
Then you can match them because then you got the
Exactly.
pool of people.
So the people that live in Claremont and want to move out to Alpine now.
Yeah.
There's a lot of people that do that.
Right. Right.
Elderly, they want to get away from the traffic, everything else, whatever. That frees up the homes. You start matching that financing out there.
And then other people can come in.
It's a longer process. It's not going to be a loan done in 21 days. Some of this stuff that's gone on is irritating for an old guy like me. It's like, I remember it used to take us 30 days to do a loan, and then all of a sudden we had to do them in 17 days to compete.
Well, that's because you're living in the instant economy now.
Instant gratification.
We want everything right now at the touch of a button, and I better not have to work for it at all.
So one of the ways that your generation gets into purchasing a home is a little bit of delayed gratification. So this is going to be tough to hear, and you may want to pick up the plant and hit me. But you got to get over some of the things that bother you about making that first purchase. So, for example, in general, if you are a fully qualified buyer in today's market, what the hell are you doing not purchasing a piece of property? You've got to grow, right? So for the first-time home buyer, you've got to, if you want to be a player in the game, you got to buy some chips. You got to make that first purchase. What do you do to buy a house? And we had a little discussion before the show. And look, your lender's telling you the truth. You need down payment assistance.
Mm-hmm.
Don't wait for the city to give it to you, folks. It ain't going to happen. That's been one of the biggest games. If your parents have equity in their property, and they have the ability to pull a HELOC, a home equity line of credit, they should be doing that to invest in you, particularly if they're in Minnesota. Just think of the appreciation rates.
Sure.
There's a difference, right?
Yes.
So they're making an investment in property in the state of California. All you have to do is draft this stuff legally. They become a co-borrower. So that's one of the things I want to talk about.
Okay.
Your generation, and you told me as well, and hope you don't mind discussing this, but not only are you renting the home, you have another family in that home.
Yeah, the other family owns the home.
Okay.
And we live with them. Now, they're family of ours, so it works out really nicely.
It works.
Look, there's a yard. My daughter has her cousin to play with. So, I don't like what I don't want people to assume is that I'm in any way bitching about my situation.
No.
But yes, when I think about it, I look at my parents. They were, in their early 30s when they bought their first home. And now, my mom, she's living in an apartment. And my dad passed away. My stepmom has two younger kids that are, in college. I mean, there's a big dynamic there. Not now, would my stepmom lend me money for a down payment? Absolutely. And we've had that conversation. But the thing is
what would it be a good investment? Are you a good investment?
Well, right, but I can't afford a $6,000 mortgage payment, $7,000 mortgage payment.
So it's really the payment that you're doing.
It's the financing.
Okay,
right.
But here's why I'm doing. Use the existing money that's sitting on the property.
Right, which is genius.
Because now, but shine your shoes before you get into it. In other words, have that other money prepared and ready.
Mm-hmm.
And one of the ways you can do that is contractually, because you want to secure whoever lends you that assistance.
You want them to feel
need to
good.
be secured with a trust deed on the property.
Yep.
Okay.
Right.
That also allows you to do something else. 2-3 years down the line, you can now take out the HELOC as your income increases. You can take out a new HELOC that pays off that private loan.
Yeah, that's true.
See,
This is the stuff, though, Jim. See, the reason why I love this conversation is because I have this saying, and we've talked about this before, that the general public is usually not a well-educated public, because why would the folks with all the money and the power want you to be all that educated?
Well,
right?
but a lot of people are look. When I was opposing a really bad bill for the housing bill in the state,
Yeah.
It's not that people are ignorant to the issues. They're too busy working to pay their mortgage.
Sure. Yes. In fact, I want to say now compared to, back in the day.
Yeah.
The average amount of friends that people have my age and younger is like astoundingly higher than it was because of phones and email and communication and social media and all of this. The amount of productivity that companies want. And look, it's not because, they're being unreasonable. It's because like our brains are not catching up with the advancements in technology, right? But all of that, the pressure, the stress, when you look, people my age, look at, and I got to tell you, if I did not have spirituality in my life, I would be a dead man. And I don't mean like, I'm not sitting up in the Zion temple meditating.
No.
But looking at things like, look, if I don't get, if when I look on social media and I see a buddy of mine who looks to me like his life is better than mine in all aspects, nicer car, bigger house, has a house, looks like he's happy, all this kind of stuff. What a lot of people look at that and they take that for face value. But in reality, that guy could be fucking miserable. He could be barely making his house payment. He could be, so when I say like not well educated, there's that group, but there's also like people that just are trying to keep things up for appearances. Won't have the vulnerable conversations like I'm sitting here telling you, like, hey, man, I'm in a bad spot. And I don't know how to get out of it, and I need help.
That's what I appreciate about you.
You know what I mean?
Because you're honest enough with yourself.
Yeah.
And you that's where it starts. Look, if you prepare yourself to purchase, this is what I would be doing if I were in your age group.
Mm-hmm.
If I can't purchase today, man, I'm going to figure out a way. How do I purchase tomorrow?
Mm-hmm.
I would start acting like it. Now, this may be a real tough one for a lot of people because I know the cost of living is high.
Right. And keep in mind, folks, this guy, he's been in real estate and real estate related businesses for how many years?
43 years.
So 43 years. So all you agents listening, this kind of stuff that he's talking about is going to help you immensely dealing and speaking and helping home buyers my age and younger. And by the way, millennial women have a ton of buying power, I think, right now as well. That's still one of the biggest. So listen up here, because he's laying out a roadmap for somebody like me and in our generation. Again, I'm 39 and younger, on the correct mindset to have.
Right.
That isn't the instant, or the clickbait sort of, bullshit type of thing where somebody's taking advantage of you. So I didn't mean to interrupt you. Continue, Jim.
No.
Let's
go
hear
ahead.
it.
So what are the things that your generation that I've noticed? Look, most of my friends are actually in your age group.
Mm-hmm.
It's a weird phenomenon. It's just how it rolled for me.
Okay.
But I see them spending money on things that it's kind of heartbreaking for me, because I know that if they owned a home, they wouldn't be spending the money on those things. Part of it is the cost of living is way.
It's up.
It's astronomical.
Right.
But even in that, because this is more about an attitude, you should be acting today like you're paying on a mortgage.
Sure. Well, I agree with you, and that's,
and then maybe that's you're putting just a small amount away.
Mm-hmm.
Call it $25.
Mm-hmm. Yeah.
All right. And you put that into a fund that's your down payment money fund.
Okay.
It's not about the.
And then in
It's not about-
2065, I'll be able to afford a.
No, it's not about the money. And I knew you were going there, Max. I'm gonna get up and smack you because I love you, brother. I want you to own by the end of next year.
Okay. All right.
What happens when you do that? You just put that money away. It is a paradigm shift.
It's a mindset thing.
It's a mindset.
And that starts it.
It shifts because otherwise you are vulnerable to believing you'll never own a home.
Sure.
It's one of the worst things I hear from your generation. And I'm like, don't say it.
Yeah.
Because it'll come true for you.
But
So
but
part of
it's not
it's the
just me
mindset,
saying it though. It's
but-
agents saying it.
Okay, what agents look at?
Or they, we're going to figure out how we can do it for you. And then, they run the financials and they're like,
Right.
can you borrow, so it's like, I get what you're saying and I 100% agree. But what I'm saying is all the mindset in the world is not going to change numbers on paper.
That's so true. So to have a mindset that you cannot go and borrow from someone who's already intimated that they would lend you the money
Yeah.
is silly.
Well, sure.
And here's why it's silly. I get why you don't look at. I didn't have. Well,
It's
no.
an ego thing, man.
As a matter of fact,
It's an ego thing. I'll be honest with
As a matter
you.
of fact, when I got in, when I first realized, oh gee, I don't want to work for Century 21. I don't want to work for Coldwell Banker. I don't want to work for Berkshire Hathaway anymore. Worked for them all.
Why not?
I wanted to go into business for myself.
Yeah.
All right.
Yeah.
When I did that, I had to go to my parents and borrow $17,000, which in today's dollars would be
A lot.
maybe 70.
Yeah.
Who knows? And at the time, I said, look, they were earning 10% interest on the money. I said, I will pay you 17%.
Ooh. Yeah, good investment.
Well,
Did you pay that back?
oh yeah, but when I tried to, they said, no, don't pay it back.
Yeah.
We need the income.
Yeah.
So
Right.
yeah, I kept giving him the income.
Okay.
So
Yeah.
look, if you have the mindset that you want to buy within this next year, and you don't let this fear of or this horrible phenomena that people get into about interest rates,
Yeah.
because
Lots of fear out there.
you have
right?
another avenue. You get your ass on the registry of our FHA Swap Program,
Okay.
and you don't expect it to happen overnight.
Well,
This thing has got to
Right.
fill up,
Right.
right? And I believe it will. I believe there's enough people out there going, yeah, I would
Yeah.
like to move up.
right.
Yeah. Broker Jim, find me an FHA guy,
Yeah.
in
And
Scripps Ranch.
it
can move from Chula Vista or whatever move you need to make. Just a lateral move across the county is almost impossible now. A lot of our sales were he began his job in Chula Vista, or she began her job in El Cajon, and now they moved cross county.
Mm-hmm.
You could easily move. That's not true now. I just wonder what the commute is like for most people. I hear of some of the commutes. It's like all the way to Temecula. You're going all the way to Temecula,
You know what, man?
because they're stuck. And so we need the movement. So look at
But hang on there, just one sec, because I know we talk about the instant like that personally. I don't have as much of that I need everything right now mindset
Right.
as a business owner
Right.
and a guy who's been in entertainment. Like, stuff takes forever. And at one point, right after I was divorced, every single day I was driving from Escondido to Vista to drop my kid off, and then down to Mission Valley to work, and then back to Vista and back to Escondido. And I never complained about it. However, there's a lot of people in my generation, and especially younger, that said, you're fucking crazy. I don't know why you would ever do that. And my answer was, well, because I didn't have a choice.
Well, you didn't have a choice. But
I needed to.
But look, you're going to be into property within, by December of next year.
His lips to God's ears, everybody.
Yep.
He's going to help.
Yep. And I'd like to see a lot more of your generation in.
Yeah, I love that.
So look, I
love what you're doing, by the way.
I'm developing several programs, and I'm working with a network of agents who are taking the same attitude.
Mm-hmm.
So if you're an agent and you want to contact me and be a part of this, great. So part of the answer is being willing to borrow down payment money.
Sure.
When you need to eat your ego over it.
Right.
And to make it a good business proposition for the person lending you the money. They can it's very easy for us to create a trust deed on that property to secure their investment. And then for you later on down the road, as your income increases, and your monthly payment won't go up.
Yes.
Right?
Right.
Yeah, then you can go back and refinance that HELOC. And look, I kept trying to drill this into clients back in the day. Yeah, the rate's high today, but the possibility of rates coming down is still there. Now,
sure.
For a while, we didn't believe that, and because there was a long stretch before rates began to drop. And then when they did, everybody refinanced. This is part of why everybody's kind of landlocked right now, because they've got that low interest rate. They're in their home. They don't want to trade that low interest rate. But getting back to the FHA swap, you're going to trade a low interest rate for a low interest rate. But you will need some down payment assistance, so you've got to have that. Hey, bite the bullet on that. Put together, to start having that conversation now with people who did. And then in the meantime, we need policy changes. For example, what if that guy in the middle moving up didn't have to pay any capital gains if he was moving out of state?
Mm-hmm.
Like he's he's going to move down.
Right.
In property. What if capital gains in the state of California was waived for him on the condition that the purchaser of his home is a bona fide end user?
What does that mean?
The bona fide end user is the person who's going to buy the home and occupy it. So now we're establishing a tax incentive instead of a regulation. I'm much more for encouragement than discipline. Those kind of policies can facilitate getting true California homeowners into the home, right? So we could incentivize putting the end user, and we have to have a discussion in California. Who do we want to be the end user of property in California? Do we want it to be BlackRock?
Just for clarification here, who is BlackRock?
Oh, okay. So BlackRock is you can Google it. They are the largest institutional investor of property in San Diego County.
Got it.
One of the things they did, and this goes back, and I'll have conversations in some of the later podcasts about responsibility and your responsibility of what's gone on. But by 2008, when we went through our foreclosure crisis, what we noticed as agents is up pops the investor.
Yeah. Right.
Right? Well, what was a little bit more daunting than just an investor. Like if it's a local San Diegan investing in San Diego, that's not what I'm talking about. But when it's an institutional investor, that's like they're rating our housing stock And those boys are not even from California.
Right.
So they come in and they get to purchase the property on the cheap because they have the cash.
Yeah, they have the resources to do that.
And because we don't have any policy in place saying, hold it, we need to get homes to Californians.
Yeah.
We need to get them to the end user.
Yeah.
You're the end user.
Right.
And you have a psychology degree. You know damn well what it means if these families don't get homes. They don't have a place to raise their kids.
Yes, but I got to tell you, as speaking from my generation, there's another issue at play here. Another thing at play here with my generation is, that saying, beware of false prophets.
Right.
So here, and you mentioned, Joe Rogan, Jordan Peterson. There's all these. It is very easy to create content and push a narrative, right?
True.
That's easy to do now. Anybody with a phone can create a podcast, stuff like that. Now, if you're here saying we need this, here's how you do it, here's the roadmap, and I'm like, okay, great, and I hear that. And then another guy says, bullshit, you want to rent. You only want to rent a home. That's a liability. You're stuck in one place. Everybody thinks owning a home is great. No, if you're out there in San Diego, no, you want to rent, you can move, you can save. I crunch the numbers for you. And then you got another guy that's like, no, you don't want to do either one of those. You want to do this instead. And you have all these different people pushing all these different narratives. It becomes very confusing as who to listen to.
Right.
So there's that, and the reason why that's happening now, and this is in businesses too, and the media doesn't help. You got the media pushing fear and all this stuff. But what I want to know is, and maybe you're the guy that can answer this, is how do I cut through what is bullshit and what isn't? Because with everything, housing, diet, cars, business, everybody's telling you, no,
it's a juggernaut.
It's all. I'm a marketer, so when somebody calls me, guarantee, satisfaction, money back, I know I can 10x your this or that. Bullshit. All of that is bullshit. How do I know who's the person to listen to?
I think you have to learn how to listen to yourself first.
Well, right, but these people are good at playing on human fear.
I know that, but what I'm saying is 100 levels down, brother.
Got it.
100 levels down. You
got to look within.
You got to look within first. So you have to. It's just like, let's get back to the home buying frustration.
Sure, but this is part of that.
Well, it is,
because somebody like me is there. I'm online.
I'm tying it in.
Should I? Okay, good.
Because you can be barraged by, well, you have to do this, and here's a new way to do that, and you're not gonna hack this one.
There you go. There's the answer.
You're gonna have to do the hard work.
Yep.
And the hard work really begins with yourself.
Mm-hmm.
So you do have to listen to all those voices, mine included.
Yep.
And then you have to go, well, but who's telling the truth? Jesus, the truth is an intuitive thing. It's not. Truth and logic are pretty far apart. They're all connected, but it's a scale. So you have to look at intuitively what's going on with housing in California. Look, if you come up with a decision, if you're because people were getting into homes. My first home was 25. Now it's 40, if that, and not that right now in San Diego County. Look, our property's locked down.
Yeah,
it's shut. There is no real estate market here.
Right. Yep.
Look at God bless the agents who are still hanging in there.
Yeah, a lot of them. And my business. I have broadened out now, but I used to be pretty exclusive to real estate agents, and a lot of them quit. A lot of them went back to corporate jobs. Yeah, they had to, right?
The no inventory. Look at, you're a salesperson and you don't have any inventory. Yeah, your job's over.
What do you do, man?
I'm looking at the agents who've remained.
The full-time
agents who've remained. You know what? I got to really admit, it ain't so bad that we parsed this out, because this was an organic parse.
Yeah.
In other words, the reduction in the numbers of agents was something that needed to be done.
Yeah.
We knew this on the level of the Department of Real Estate and what was going on, and you know what they were trying to do with exams and stuff. But there was a lot of irresponsibility and gold digging and stuff that happened on parts of agents and on lenders and on builders and everyone. As my mama used to say when she'd walk in and all 5 kids are fighting, we're all fighting with each other, there's enough responsibility to go everywhere.
Right.
All right, so look, we can all point the fingers, but it's time for you to get responsible in order to buy a house, and it's time for brokers, agents, lenders, policymakers, the San Diego City Council, and everyone else to start having the discussion that I'm trying to inspire, and that is, how in the hell do we get the young families that we need into the properties that they deserve to have? Otherwise, you guys are going to move out of state.
Well, this could be in any hot market anywhere in the country too, right?
Absolutely.
It's not. I mean, San Diego. We're in San Diego.
Well,
this is a big one,
it
but
certainly afflicts all the state of California.
Yes.
But the sickness has gone all across the United States.
yes, we've got this similar patterns.
Yeah.
But I believe the point that you're making, and one of the reasons why I believe what you're doing is going to be so impactful, is it's probably going to piss some people off. And
Only the game players.
well, that's what I mean, right?
Only the people that haven't been genuine.
Exactly.
It's gonna
you're
all right,
saying
so I'm going
you're-
to piss off BlackRock.
Yeah.
Come get me.
Right. Right.
It's like, hey,
But you're saying that, whatever shiny image you want to paste over the true ugliness of what you're doing, that is going to be removed, because we need to
get real.
right and start having ethics and bringing some.
Yes.
Are we doing the right thing?
So I would switch the word ethics with the word responsibility.
Okay.
So my narrative is more along the lines of responsibility. Look at, for example, I'll take a quick little story.
Yeah.
They are now called affectionately liar loans. So
Liar loans.
Liar loans. So the liar loans were, they had a 1%, and these loans came out in 2000, I believe.
Okay.
And that's why by 2005 we had a big escalation in property value, because we had artificially low interest rates.
Right.
But by 2008, all these loans, these liar loans that were made at 1%, adjusted up, and people were starting to lose their property. Right?
Okay.
So there was a responsibility on the part of lenders, and particularly Fannie Mae, the Federal National Mortgage Association.
Yep.
They got imprudent with their lending, because guys doing the tranches, the GSEs, wrapping these mortgages up in bundles and selling them off to investors. The first loan that came out, that's now called a liar loan and has been banned, were actually good loans for certain people. So if you had 20% down payment, that you could show that you saved, that you didn't borrow, that you saved, but your tax returns, because of the way you did depreciation on your business or whatever, showed a low income that was not reflective of your true borrowing power, you could go get one of these loans based on good credit.
Yep.
Right? As underwriters, we would review, your tax returns, but we wouldn't make the loan based solely upon that income. These were excellent loans to get all the stratums of society into a home.
Okay.
Okay?
All the stratums.
Well, because of different income earning You know, scratch that, edit that part out. Where were we at?
You're talking about the liar loans.
Okay, so
working for everybody,
right.
and then
they worked for everybody because they worked for everybody that were good, solid borrowers, but couldn't show the income that the banks wanted to see, right? In other words, they were able to take 40 or 50% of their income and apply it towards their house payment.
Right.
Right?
Right. Yeah. See, I'm in the opposite position.
Right. I get that. So, so what those loans evolved into through the irresponsibility of the tranches at Wall Street and the irresponsibility of people on my level, mortgage brokers, and the irresponsibility of the Federal National Mortgage Association, who decided, we're going to throw away some of the more prudent sides of this, and we're just going to lay it on the mortgage broker,
right,
to verify income. And the mortgage broker's in the position of people are coming to me and they want a loan, and we can't verify their income, but they have good credit.
Yeah, so they're like, go ahead.
And if they had 20% down, that was great. We knew as brokers, somebody walking in with 20%, if they hadn't borrowed it, if they had saved it, it was true.
They have it like liquid.
They have it liquid because they have it in their savings account,
Yes.
and they've had it in there for more than 3 months.
Right.
Right. We knew they're not walking away from the home.
Right.
Hell no.
Yeah.
They'll fight and do whatever they have to do to make the income and make that payment.
Yeah.
So there wasn't any, foreclosures due to that.
Right.
Where they came into play was when Wall Street got real fancy with doing second trust deeds on the top of these first trust deeds. So the first trust deed is this non-income qualifying loan, and then they would come in and they affectionately called junk loans. They were, and that gave the borrower now 10 to 15% of the 20% down payment that he was going to put down.
Ah, gotcha.
What did you just do there? You just did something so imprudent for your borrower, for your
because now you said
bank.
now you don't even have to have the 20% down, right?
So
We'll borrow that to you too.
I remember when that happened, and I had loan officers working for me at the time, and I came to them and I said, "We're not doing this."
Yeah.
I had most of them left.
Yeah.
I get it.
Yeah, doing the right things.
I've been in it long enough to know, this is not good.
Yeah, this is not good.
And just because you can make 4 points on the loan
isn't a good reason to do that.
It's not a good reason to do this. Just because you can make money originating is not a good reason to do it. Yeah. Please, people have some common sense and look down the road. So that's what that's where I come from. I come from a space of
be responsible.
Yeah, you got to be responsible.
Yeah.
No, it's not like I haven't done irresponsible things.
Of course not. We all have.
But really, my invitation is to, hey, let's all get a little bit more responsible about this.
Yeah.
And the sad reality is we could use those adjustable rate loans again.
Mm-hmm.
And if we use them properly, so overreaction by the government, boom, no more. Mm-hmm. Say, outlaw them.
Yeah.
So, and I'll be doing a further podcast that gets into a little bit more detail about those adjustables, about why I think that, where some changes could be made. But the biggest changes that we can make to the market today is people taking personal responsibility in every line of work.
There you go.
With every damn industry that's attached to this,
mm-hmm.
from home inspectors to appraisers, to lenders, to the home buyer themselves.
Sure, yeah.
There was a lot of people in 2005 buying homes
that knew they
were going to lose them.
Yes, yeah.
And walked into it anyway. It's like, probably not so good.
Yep.
But I'm an optimist, and I retired from this whole thing 4 years ago,
mm-hmm.
and I was kind of forced into retirement with COVID, because when you can't show the inventory. You can't sell the inventory.
Yeah.
Right?
That's pretty tough.
We actually had inventory at that time, right? It was going at a good clip.
Virtual tours.
And I could have just walked off, in the weeds.
Mm-hmm.
But there's something about me that's like, no, I don't like this at all. I don't want to live in a state without young families.
Mm-hmm.
I don't want to live in a city
Yep.
without young families. I don't want to live with all my neighbors being renters.
Mm-hmm.
I want so
kind of
it
takes the dream out of the American dream,
Well, yeah, and look, the saddest thing is if we lose the dream, the hope of it.
Mm-hmm.
And that's what I was saying earlier about just have a little down payment account, $25 a month.
Yep.
I know it sounds wacky.
Yep.
I get it. It's a mindset. It's a
Sure.
paradigm shift.
Yeah.
This paradigm shift has to begin in at the bottom.
Yeah. Well, that's the thing.
And that's how it moves up.
What at the crux of all of this, it's we're all cogs in a machine.
We're all connected.
And we all need to take the personal responsibility.
Yeah.
Because if only half do, then that's not going to work. Or if everybody does, but the people in the tranches, they're not, then, we're going to get a lot more of the same. But I think you're right.
Well, think about it this way. What about you and I?
Mm-hmm.
We're starting right now.
Yeah.
We're having this conversation.
Yeah.
This will overflow, believe me, because people know intuitively. Every homeowner in San Diego knows intuitively, ooh, what's going to happen when for any reason, I need to move? I may be sitting here really in the grace of God having a 3.5% 30-year fix.
Yeah.
But, what if I get a job transfer?
Yeah.
So, look, everybody needs to have the conversation,
mm-hmm.
right? And that's what I'm doing. I'm inviting agents. If you want to walk this path of responsibility, stop selling this inventory to an investor just because you're going to get to double in the deal.
Yeah. Yep. By the way,
instead, make your buyer able and prepared to compete with the investor. I'm also going to be talking with sellers. One of the episodes is going to be sellers in San Diego. Who in the hell should you be selling your home to?
Mm-hmm.
What's the most responsible way to fix this?
Mm-hmm.
So, for example,
Yeah.
if I can bring you, Mr. Seller, if I can bring you a fully qualified buyer, he's not all cash. He's going to go get a bank loan, but he's going to close this in 30 days. Really, if you're going to net the same, and you're not willing to wait the 30 days because the buyer has to get a loan, and you're going to take the investor.
Yeah. That's
wow.
That's what you mean
How
by
responsible is that?
Exactly. Right.
And that's going to come back and bite you in the ass, because when you want to go sell your house, when you want to go purchase a new home, you're going to have to fight the investor. And in fact, that's one of the things that's locked up the market, is that people know there's going to be multiple offers on that house. Why am I selling? I've got my pad. It's not perfect. It's like, I know I need to move, but you know what? I'm staying here because there's not going to be anybody to take care of me on the other end. What if we start just where we can? And that's what I'm doing with the FHA Swap Program and the registry. Just register on it, folks.
Right.
Be a part of the solution.
Yeah, I think that's a great message. And, just to piggyback, the question I had asked, how do you know who's telling you the truth? How do you know who to listen to? The answer to that question, I knew all along, is the person who tells you that you need to make the emotionally challenging decision. Yeah. Because there are no shortcuts. And, in this country, we like shortcuts. Nobody wants to eat better and exercise. They want to take, the quick fix for it. And I get that. It's human psychology. But, usually if somebody is telling you that you can have everything you want and you can have it really quick and it's going to be easy, that's usually not true. Well, yeah. And if there's no personal responsibility on you in any of it, you got to watch out for those people. Yeah. So you guys heard it right here from Jim LaMattery. This guy, he's going to be definitely on this show again, but you're going to have, you're coming back in a big way, I hope.
Yes.
And you're going to have your own show.
Yep.
And you're going to be having some important and difficult conversations with people.
Right.
Where can agents learn about you? Where can people in San Diego, homeowners, homeowner hopefuls, sellers, how do people get a hold of you?
Okay, so I've had a lot of people get a hold of me, so I've had to whittle it down into a manageable contact.
Got it.
You've got to hit me up by email. And listen, I'm inviting anybody who has input on this, anybody who thinks that they too have solutions, because look, it's going to take everybody to get us out of this crappy market.
Yep.
And get us moving again and get us healthy again. So look in the links for the email address.
Gotcha. I'm going to drop that below, guys. I hope you got a lot out of this episode, a little bit different from what we normally do. But hey, this is important stuff. This is stuff that people aren't talking about. And this is stuff as an agent or as a lender that you need to know about, especially if you've got millennial and younger clients, but even like anybody, right? So hope you got a lot from it. I will see you next time. Jim, thanks for being here.
Thank you.
Look forward to working with you more, and we will see you guys soon. Have a good one.
Great.